The JSE delivered strong results for its 2024 financial year, recording revenue growth across most of its asset classes. This as the group's diversification strategy bared fruit, benefiting from sustained positive market sentiment following the formation of the Government of National Unity. For further analysis of the performance, JSE CEO Leila Fourie joins us now. Leila, thanks so much for joining us today. And I wanted to start off by just zooming in on those numbers. So growth in both the top and bottom line, we're seeing that come through, but it seems to have eased from the growth we saw in the comparable annual period. As we start off, just take us through the reasoning behind that as you just contextualize the 12 months that was.
Thanks very much, Ntaling. And we've seen that our business has been strong, stable and sustainable, and it's consistently over time generating good quality earnings. Our NPAT, our net profit after tax, was up by 10.4%, and our ROE was up from 19.4 to 20.2%. Overall revenues were up by 6.5%. And this is really demonstrating an overriding earnings resilience and strength through the cycle. And it is, as you said earlier, a function of our successful diversification efforts. If we look at our share price movement over the past year, we've outperformed all major benchmark indices, with our share price up by more than 30%, and our total shareholder return is 40%. So way in excess of the local and international headline benchmarks. We are also managing very carefully our costs and our growth initiative. And we focused on delivering much faster through partnerships and focusing on innovation, which is really at the heart of our technology transformation approach.
And we'll get into those initiatives and partnerships in a bit. I want us to look at the equity markets, which seem to be making somewhat of a comeback. Over the past year, we've seen sentiment improve. It does seem like sort of a tale of two halves, with the first half of the year, quite tepid, quite quiet. But by the second half of the year, we saw the post-national election optimism coming through. Just walk me through how that has, impacted the trading part of the business, even as we started seeing more listings, new listings coming through at that part of the year.
And Ntaling, we've definitely seen a tale of two halves. In the first half was down. In fact, our first quarter was down 24%, and we ended the market up 1% on value traded. So we saw a surge at that point of inflection during the introduction of the GNU, and that surge has continued into this year. January and February, our average daily value traded is up 45%. And so we are starting to see a wider diversification of investors starting to look at South Africa, whereas investors previously were underweight the index. They were undervaluing our company's ability to grow, the listed entities. That is starting to shift. They're now starting to see a balanced position, and we expect that they will go overweight to the extent that we're able to grow the economy. Of course, stability of the GNU is critical, and the international geopolitical and general macroeconomic backdrop through inflation and all the geopolitical crises that we read every day is starting to affect us. Of course, we've also seen an uptick in our listing space. We did introduce multiple reforms, and we saw 8 companies listing on the bourse last year, and we've seen more than an increase of more than 150% in the additional capital raised. So all of these signals are starting to show green shoots. We're cautiously optimistic, but we are really focused on managing the controllables in our environment.
We'll get into, the diversification strategy and how that has been boosting revenues. But I'd like to get your thoughts around new businesses listing on the JSE, because what we have seen is a trend of unbundling. Are we seeing perhaps new businesses maybe shying away from the JSE, from listing or markets in general because of the current economic environment that we are facing, that we're dealing with?
Ntaling, absolutely. Listings is very much a function of macro sentiment, of business confidence, both globally and locally. And we have seen a theme of unbundling, and those unbundlings have largely been shareholder value unlock. So whether it was the We Buy Cars or the Boxer unbundling, both of those unlocked real value. And I think even in the case of Boxer, which was a very successful listing, not only was value unlocked for those shareholders, but it re-rated Pick n Pay, who had a material investment into the Boxer listing. So we are seeing that as a theme, but we're also seeing a number of potential listings in the pipeline. So again, on the theme of unbundling, Anglo American looking to unbundle Anglo Platinum in the middle of the year. Canal Plus is a large multinational who are listing on the London Stock Exchange. They've signaled that they are contemplating a local listing. And then African Bank, Virgin Active, Coca-Cola, those are all still in the global market. Looking, they're still, in the public markets looking to potentially listing.
All right, so let's get into the diversified business segments, now contributing about 37.8% of operating income from 36.8 last year. Walk me through some of the prospects for that business and whether there's still more room to run when it comes to those segments improving and just contributing more to the top line.
This is a very important component of our business, and we've invested heavily in diversifying our non-trading revenue. And the reason for that is to try and provide a buffer and create greater resilience. And really, it's off the back of growth, double-digit growth generally. Our JSE Investor Services business grew by 20%. We've seen material growth in the primary markets and in our co-locations business. And so we continue to invest in those non-trading businesses, as we do in our trading businesses. But the non-trading businesses just really provide a cushion when market sentiment drops and our activity drops along with that. So we've grown our non-trading revenue nominally by more than 80% over the last 5 years. So we're very pleased with that revenue line, and we are starting to see the benefits. You can see in our overall results, market average daily value traded for our equity market was only up by 1%, and yet our net profit after tax is up by 10.4%. So really a good story and something that we're going to continue doing. We think the growth will normalize somewhat in some of those business lines. And we are, as I said, starting now to see the pickup in our equity market trading.
Leila, thanks so much for your time and sharing insights on the year that was for the JSE. That was Leila Fourie, CEO for the JSE.